And welcome, it's Mary Ellen McGonagle here with your Weekly Edge show for Friday, December 15th. Today, we are, as usual, going to take a look at the broader markets and beyond. We want to be on top of this sector rotation that's continuing to shape up beneath this bullish backdrop. Also, some of the news that drove price action last week, more impactful news that will help drive the markets further along. And then last up, viewer question of the week. And this question is all about capitalizing on some of these newer areas that are reversing their downtrends in light of the broadening out we're seeing in the markets. So some of the news last week, we did see consumer price and producer price numbers. These are key inflation data, and they did show declining inflation backdrop. This is very good news, certainly for the markets, but more importantly for interest rates. Most impactful were Fed Chair Powell's comments after the FOMC meeting, where he signaled that we are at a likely end to the rate hike campaign, and that is great news for the markets. We also did hear from Fed Chair Powell that we could potentially see rate cuts into the latter part of next year. Also good news. U.S. retail sales came in today and the numbers were good, improving an already bullish retail environment, which I'll share with you via a chart and some stocks, which I will share with you by a look at the S&P 500 retail ETF. So let's go ahead from here and take a look. Where did the markets close for the week? And here we are with a daily price chart of the S&P 500. And the S&P gained about 2.5% last week, which in turn pushed this RSI further into an overbought position. So you do want to have that in the back of your mind, because an overbought position on a broader index is not common. And oftentimes it will lead to, at the very least, a pause, which we did experience here into late November into early December with an overbought RSI. And then other times you will see either a slight or a more pronounced pullback. So keeping a close eye on that. However, if we move lower, we can see this MACD, nice crossover in positive territory, and nice high volume characteristics on last week's rally with the S&P 500. Here's a view of the Nasdaq composite, also up here in an overbought position with that RSI, but again, bullish characteristics on that MACD, nice high volume on this week's rally, very bullish backdrop with interest rates, and we can see a bit of a pause at the end of the week, not entirely unanticipated, but keep an eye on that RSI. As long as we're above 50, we're in good standing. A break below 50 historically has preceded a more of a pullback. Moving along, we want to be aware of where that relative strength is among the underlying 11 sectors in the S&P 500. We're looking at a 2-month daily price chart view, and I've sorted the list by RSI. So up here in this upper quartile are going to be your stronger areas. And then in the lower quartile, those that are weaker. And by and large, you want to be, of course, participating in these stronger areas and make sure you're not overweighted in these consistently weaker areas. So up here at the forefront, XLI, that is industrials, and XLY is consumer discretionary. And I am lumping them together because both areas were benefiting from the reduced interest rate environment, which in turn helped improve not only new home construction stocks with the low mortgage rates, but also those areas in the industrials that provide products to those new home builders. There were, of course, other areas in industrials such as transports, which gained as well. But a lot of that having to do with the more industrial names, again, that provide to those home builders. Discretionary also had home furnishings, for instance, and travel-related stocks continue to gain traction as well. Moving along, financials up here at the forefront, up 3.4% for the week. Again, that reduced interest rate backdrop helping improve the outlook for these banks as lending activity is anticipated to improve. And then taking a look at technology. Now, technology had been languishing here. This is that November into early December period. But take a look. We've seen an advance here more recently on very heavy volume, and that is what you want to see. As we move through today's show, I will share with you areas of technology that are newer and why this recent advance, certainly over the last 6 days in technology. As we move through, we want to, of course, be aware of some of these weaker areas, and we can see consumer staples, utilities, and energy down here in this lower area. Of course, these staples and utilities are more defensive. Energy suffering from a reduced oil price and just lack of fundamental dynamics to help propel those energy stocks higher, so not looking healthy there. From here, we want to move on and take a look at underlying groups beyond those 11 sectors, because to know that a sector is exhibiting strength is not going to be quite as impactful as knowing beyond that which groups are pushing that sector higher, again, so you can participate. And here we are. Front and center, XHB is that home builders ETF, and you can see it is very much on the move higher. I will share with you a view of the yield on that 10-year, and it got down below 4%. More importantly, with mortgages, we are seeing sharp drops in mortgage rates, so there is anticipation that we may well see these builders continue to trend higher. This is a weekly view, and you will see that we are still relatively early in the advance into these builders. Moving along with these sub-industry groups, I talked about technology on the move higher. Let's take a look at one of the primary reasons, and that is semiconductor stocks, which are on the move higher. A couple of bellwethers, certainly the best performing among them are Broadcom and Advanced Micro, and I will tell you, I have those precise 2 names on my MEM Edge suggested holdings list that we got into earlier, and they are experiencing nice continued advances, but there's also broadening out beyond that. A lot of newer, smaller cap semi names that are on the rise. As we move through, I wanted to share with you a view of the equal weighted S&P 500. The S&P had a 2.5% gain, but the equal weighted was up almost 4%. So we are continuing to see a nice broadening out beyond those heavyweight names, and this is good news for the markets because we need that broadening out to help provide a platform from which the broader markets can continue to advance. Quick view here of regional banks. I talked about financials benefiting from lower interest rates. KRE up another 8%. This is another area. I have 3 bank names that we added back here when the group first turned bullish. That said, there is still room for further upside in these bank names, so don't look away despite the sharp advance they've already experienced. Another newer area, I talked about that viewer question of the week, and this certainly would be one example, and that is the advance in biotechnology stocks, which had been on the move higher, but now we've moved above that 200-day. We have that green 10-day up through a golden cross formation, following golden cross formations down here as well. And I will share a name with you in that biotech space. And let's take a look down here. Now, this is exhibiting weakness, but that is what you want to see. It's the yield on that 10-year treasury down at 3.9%. And that is a great place to be below that 4% level as we look for continued brightness and strength in the broader markets. Here we are with XRT, that retail ETF, and you can see the sharp advance that is continuing to take place. Oftentimes when you see this much of an advance, certainly from this 62 level to 71, you may think that you missed it. However, again, only need to look at a weekly chart to note that XRT is just getting into positive territory with that MACD. While there are names that are up and out, Home Depot among them, there are plenty of retailers that are just getting started. As mentioned, I did want to share with you that viewer question of the week, and it's all about looking at areas that, again, are newer in their advance. So what I'm going to share with you is a view of the Russell 2000 index. And you can see it's another area that has had sharp vibrancy over the last several weeks, up another 5.5 this week. But let's go ahead and broaden out with a view of this Russell 2000 ETF, and you will see that same dynamic where we are just now entering into positive territory. Small caps have had a very difficult period with several downtrend reversal attempts that have faltered, but this particular rally that we are looking at, and we are looking at a weekly chart, we can see much higher volume characteristics, and this is good news. It does indicate accumulation. We can go back certainly to coming out of that 2020 bear. You'll see similar high volume characteristics and also bullish momentum. The RSI is much higher, certainly higher than it was during these prior downtrend reversal attempts, and you want to see that. That's called a confirming RSI. So good news there. From here, I will share with you a couple of small cap names that have been on my radar and are on the move for very sound reasons. First up is UPST. This is Upstart. It is a consumer financial company, and it is benefiting from that reduced rate environment. Let's go ahead to a weekly chart first, and I will share with you some of the dynamics that make it compelling. UPST did have a move the prior week back above this 200-day simple moving average. Good news. Hence, from there, we did this week break out of a high, tight flag formation, which oftentimes precedes further upside price action. And then we did have nice high volume on that breakout. From here, we can take a look at the full quote for Upstart, and I wanted to share with you that the company, again, is in that consumer financial area, but also the fact that their market cap is $3.8 billion. That puts them in a sweet spot with that small cap space. I talked about biotechs trending, having a big week last week. Let's take a look at a couple of small cap biotech names that you may want to put on your radar. This is IOVA. IOVA is the ticker symbol, and we can see this now uptrending stock has broken back above this 200-day simple moving average, a $2 billion company, and this momentum is continuing to shift higher. Last up is a stock that has been down and out for quite some time. Another small cap name worth being on your radar, that is SunPower, SPWR. A couple of dynamics that caught my eye is the fact that we have decisively broken back above this 50-day simple moving average, nice high volume characteristics, a move of that MACD into positive territory, likewise with that RSI. And the beauty here is the names that I have shared with you are each in different areas of that small cap grouping. For screening purposes, one way that I would suggest doing so, for instance, with stockcharts.com, there is an ability to sort by what is called a stock charts technical rating, and then by market cap. From here, it will present you with those stocks that have the highest technical rating, and indeed UPST is in here. You can pull up a candle glance view and take a look, because you'll want to make sure that it has the proper volume characteristics and so on. That's it for this week, everyone. Have a fantastic weekend. I'm going to look for you here again next Friday.